In this video, we are going to look at the financial assessment a borrower must pass to qualify for a reverse mortgage loan. Let's assume that you have enough equity in your home to obtain a reverse mortgage, and all the borrowers are at least 62 years of age. In completing a financial assessment, the lender will look at your willingness to meet your obligations, which is based on your past behavior, and your capacity to meet your property insurance and tax obligations, which is based on your future income. In evaluating your willingness to meet your obligations, there is no minimum credit score required. The lender only cares that you paid all your debts, especially property-related charges, including property taxes and insurance, on time for the last 24 months. The lender will permit you to have 2 30-day lates on your mortgages and installment loans in the months starting 13 to 24, provided you have a good explanation. You must always have paid your property taxes on time for the last 24 months. If you meet these criteria, good for you. You are probably in pretty good shape. However, if not, you will be asked if delinquencies more than these were due to some one-time or unusual circumstance that you can document, like a lost job or illness. If you can't explain it in this way and can document it, then again, you're probably in good shape. If you're unable to document why you've missed payments or you just simply decided not to pay, then this is a far more complicated issue. The lender may decide not to grant you the loan, or the lender may decide to approve the loan but set aside enough money to possibly pay all the property taxes and insurance on the home over the life of the loan. But that set aside will come out of your reverse mortgage proceeds and reduce the net available cash to you out of the reverse mortgage. You may also be asked if you have had a bankruptcy. The impact of bankruptcy on getting a reverse mortgage depends on what type of bankruptcy you had and what you are using the reverse mortgage for. If you are in Chapter 13, the court needs to approve you obtaining a reverse mortgage, and you need to have made at least 3 months of bankruptcy payments. If you are in Chapter 7, you could possibly get approved if it was discharged over 12 months previously. Generally, you need to be able to explain you did not willfully cause your credit problems, and you need to have firmly established your credit. Are you buying a home with a reverse mortgage after a bankruptcy? If yes, you may have to wait between 13 and 24 months after a bankruptcy before you are granted a reverse mortgage to buy a home. Have you had a foreclosure? If yes, you may have to wait 3 years before you can get a reverse mortgage. Do you have judgments against you? If yes, and those judgments are not subject to a repayment agreement on which you have made at least 3 payments, you may be delayed in your approval for a reverse mortgage loan until you get a repayment plan in place and you make 3 payments. In all instances, it is good to discuss your circumstances with the lender. They can help you. So assuming you can demonstrate your credit willingness, let's go to the next video and look at your capacity to pay your future obligations.